Hello, good morning, everybody. Hey, good morning, Alison, David, Jay. How are you, mate? Good to see you on here this morning. Welcome to another Wealth Coffee Chat, folks. Hope you're all awesome and well, wherever you are. Welcome along. How is it in your world? Wonderful day here on the Gold Coast. Hopefully you're all good. Tim's back and Rocky. 4 medals, mate. Nice. Great to see, mate. Great to see. I'm a bit jealous. The last few days have been not bad weather, actually, and I've been stuck inside. But great to see you out and about, mate. Getting about. That's what it's all about. Making the most of your life. If you've got some passions, that's what a bit of wealth and financial freedom is all about, isn't it? Being able to do the things you want to do when you want to do them. Without any sort of financial stresses or worries. But there you go. But welcome along. While everything's warming up and things are kicking on a little bit, I'll say a quick hello to anybody who's new. If you are new, give us a shout out in the chat. Say hello. Let us know where you're dialing in from today. Like you see on the screen there, Tim's all the way from Rockhampton. And Kevin's all the way from Florida. Morning, Kevin. Afternoon, evening. Yeah, it's evening for you. But welcome along. Hey, today I thought we would talk about rents. Show me the money. Rents. And, been interesting of late. The tide has turned when it's come to the world of rents and what's been going on. Because for a while now, for at least a decade, rents have not grown significantly in comparison to other things. And it's been lackluster when it comes to the rent growth because the cost of interest has gone down. I've chatted to you guys about this before. Over the last 10 years, if we have a look at a little bit of a chart, the interest rates have come down to a low, was kind of like a low of 2%, ladies and gents, which was crazy good. And this is not a direct chart, but kind of rents / gross yields, folks. Okay. So I want to talk about that. I want to talk about that today. I want to talk about these percentages and ideas when it's come to the world of rents and what it looks like for us in the future. Where will rents go? We've talked about interest rates going from where they are now to between 5 and 6%. That's kind of the destination, probably maybe 5.5 to 6.5%. And they go up a lot quicker than rents. So we're going to talk about that because I'll show you that the rents going up is an absolute fait accompli, right? A lot of us, well, some of us who are uneducated, unknowing, looking at this moment in time, snapshot in time and going, the property is negative cash flow. That's it. I'd never buy it. The future is going to be rubbish. If it's going to be negative cash flow like this forever, it's rubbish. That is not a correct analysis of your property portfolio. So we're going to go through that today. But before we do, we're going to talk about a couple of things. What vernacular, what language, what words are used when it comes to explaining rents? Team, put it in the chat for me right now. What are the kind of the words, this or that, like the type? I don't know. I'm trying to sort of ask you the question without giving away the answer. Get involved. Put it in the chat. When we talk about rents, what terms are we talking about when it comes to those rents? Yield, absolutely. So the yield, and tell me what else is sort of over here. What type of yield? There's two types of yield spoken about often. So there's yield and there's actual dollars, all right? Okay, so yield is expressed as a percentage. And then this is, let's do this. This actually just cash is expressed in dollars. Okay, so positive cash flow, negative gearing, there's all these terms, right? The thing I was looking for, team, was this. Is this one. It is a gross yield and then a net yield. Okay, so yeah, before and after tax for sure. And so the other terms, as Tim's sort of saying there is, you know, positive cash flow. There's negative cash flow. There's positive gearing, right? This is gearing. And there's, what's the other one? Negative gearing, right? So we've got all these terms, these ideas, these words that sometimes confuse investors, confuse me, you know. And then there's like, yeah, Tim's there before tax, you know, after tax, etc. All right. So how, like, which number do we look at and go, how do I analyze this thing? There's so many different ways to slice or dice this. You know, what's the go? All right. So that's what we're going to talk about today. We're going to talk about this stuff, and we're going to talk about where are rents going and when will they get there. Okay. Because I can tell you right now that rents are going up, and they're going to go up a fair way. And they're going to take some time to get there. So we're going to talk through that today. So let's have a look at this. Gross and net yield, yield and cash flow. Let's have a bit of a conversation about what has been going on out there in the marketplace. And I'm going to skip over that one for a second. I'll come back to it, and let's have a look at this. Let's put this in perspective right now. So actually, I've got the calculator, and I'll do that in just a second. Right, let's say we are getting $500 a week. All right, so $500 a week. What is that when we express our language, our conversation? $500 a week is what rent? $500 a week is our top line, and that starts as our gross rent. Okay, is everyone cool with that? Gross rent. Okay, that's our gross rent. How do we work out a rental yield on a property? How do we work out a rental yield on a property when it comes to the rent? Anyone want to chuck that in the chat for me? It's fairly simple to do. Okay, so we need to know the property's value or price. So how do we work out the gross rent as a percentage? All right. So you do this. Let's go ahead and do this. Right, 52, which is 52 weeks a year, times that by 500 equals $26,000. Everyone cool with that? Yep. Year of the rent divided by the purchase price. Exactly. Thanks, Tim. So let's say the purchase price was 500K. We'll put that over here. 500K, right? Okay. And then we do the 500K. And I don't know if you can see that. Can you see that? 0.052. So this is an expression of, call it, of 5% gross yield. Hopefully everyone's following along. Yeah. Yeah, you can use the spreadsheet. We'll look at the spreadsheet in a second and make life easier. But I want to just put this in perspective before we talk, and then we're going to talk about where rents are going. All right. So gross yield, $500 a week against $500,000 equals 5%. It's kind of like, okay, great. Now, what has to come out next when we're doing our math? If we're going to go, there's a gross yield, and we want to work out our net yield, our net and our net percentage and our net cash. What comes out next? It's really simple. You minus what? Chuck it in the chat for me. I'll do that. You minus all your expenses. Right, you minus all your expenses. And your expenses are interest rates. The expenses are, you know, the insurance, your rates that you pay to council, all that stuff. You minus all the expenses, and you end up with a net cash flow or a net interest rate. Not a net interest rate. Chuck it over here. I might share on the spreadsheet because I reckon, there we go. I've already got it set up. Here's one I prepared earlier. Perfect. All right. When we come in here, I can show you. All right. So we've got up here, we've got our interest, our expenses, and then we give ourselves a sort of a net yield after our expenses. Everyone cool with that? So minus our expenses, we get a net yield of whatever it might be. And it says on here, net yield 3.3%, right? So we've gone from a 5% to a 3.3%, okay? So that's our net yield, net. So that's usually the cost of the property, not including the interest. So we add back depreciation and other things, and then we can have either a before tax cash flow or an after tax cash flow. All right. Now, for you and me, what has happened in the market over time, the interest rates have been low, and now the interest rates have gone up. Capital growth in the last short period of time, I'll put capital growth in a different colour. Capital growth has gone up. So as a percentage of our rent, let's say the rent has stayed the same for quite a while. Let's just say the rent's been like flat or maybe a smidgen down. When the growth goes up, this is growth, which is the value of the property. Let's say it goes from 500K before now to 700K, $700,000. I'll put that in the big screen. Goes from 500K to 700K. What happens to our gross and net yield? Tell me in the chat. By default, the percentage, what happens to our gross and our net yield? Team, put that in the chat for me right now. What happens to it? The properties have gone up in value, which has happened in the last couple of years, which is awesome. 500, so we're talking about our property back here, 500K, $500 a week. It's still renting for $500 a week. 500K, going up to 700. It goes down. Now, that is correct. Our yield goes down, our percentage yield goes down, but our rents, our percentage goes, yeah, exactly, Chris. So, however, our cash has not gone down. So, you know, our gross rental yield might now be 3% gross, all right? Now, this is a bit heavy when it comes to the data, but I just want to point this out. If it's 3.5% gross, and our normal rent momentum is 5% when it comes to this stuff, and it's based on a little bit of expenses and interest rate, but let's talk about this. The question is, how far do we have to go when it comes to the rents, okay? So this is the question. I was trying to set it up properly. I might have confused you, but hopefully not. Let's go back to my picture. It might be a little bit more sensible, okay? Let's have a look at, this is from CoreLogic, but it's an example of what we're talking about, okay? Now, let's say the rents in here are an area where 2011 and 12, who remembers the interest rates in 2011 and 12? Anyone remember what the cost of interest was in and around these times, 2011 and 12? Tell me if you can remember. I did have a chart, but I didn't get it up. Can anyone remember the interest rates around 2011 and 12? I've got a little chart here, but I forgot to put it on my board. Oh no, you can't see it anyway. Anyone remember what they were? 2011 and 12. Interest rates, yeah, boom. 6 to 7%. Okay, what was the rental yield against those properties at that point in time? Have a look in the chat there, folks. Have a look in the thing here. So this was 6 to 7%. That was 6 to 7% interest. Up in the regionals, it's usually 1% more in the regional areas. But when you have a look at this, and I'll try and hopefully you can see it. This is pretty close to 5%. So let's call that 4.5% in the cities. And this is 5.5% in the regionals. Now that's a big, that's, you know, the whole market. So obviously certain types of properties will rent better or less. So 4.5%. Now, if we have a look over here, and I'm just going to extend this, because this was our, check out the rental yields, right? Because as the interest rates went down, so too did the the rental yield value, like percentage, as the property values went up, obviously. But if over here, we continue this, and we say right now, you know, capital cities in 22 are at 3%. 3%, and the rents are going to what's called mean revert. How far do we have to go from a gross yield around about 3.5% to a similar interest rate time frame and what we could expect rents to go back to? Team, have a look at the difference. We can expect rents to rise between 1 to 1.5%. Okay, 1 to 1.5%. That is where we're going. What does that mean when it comes to the dollars and cents? Let's have a look at this little calculator here for a few seconds, a few minutes, right? So if we have a look at the calculator, and I've put in here $600 a week rent on a $720,000 property. If we go and have a look at what that might look like when it comes to gross and net yield, I'm going to just adjust that a little bit more. I'm going to put that down to 550. And let's have a look at what that does to our value of our rent. All right, so we've got 3.8% gross yield. That's going to get back to like a 4.5% yield. Based on the costs, based on what's required to cover the costs and operate the property. So to get it back to that 4.5% yield, we're at $550. If I go $750 on that, let's have a look. And that's back at 5.2. So from 550 to 700, hopefully you're following along. And you understand the point I'm making this morning is I think most properties, yeah, there you go. So that was $150. So the property as an expression of its income potential against its costs from a 3.5% yield back to a 4.55% yield, that's $150 of rental increase on that property that I was just showing in the spreadsheet. If you haven't got the spreadsheet, go download it. But the point is, what's the point, Jason? Bring it home. The point is from where we are right now, team, from where we are right now, to go all the way over here. Oh, there's a blank sheet. Haven't got the fancy colours. Where we are right now The rents will go up 1.5%. So as a 1.5%, and that's kind of like as a percentage, maybe 30 to 40% increase, right? So 1.5% up in general. How long will it take? Team, tell me right now as we wind this up. Rents will go up 1.5% as an expression of their yield, like let's say from 3.5 to 5%. How long would that take in general in the marketplace? Because of restrictions and legislation, what is the cycle? Tell me in the chat, what do you think the cycle would be between now and when those rents on average across the country increase at 1.5%? How long will it take? Anybody know? Chuck that in the chat for me right now. Tell me if you think you know. Time frame over 2 years. Okay? So that's going to happen over 23. Well, it's probably happening now anyway. So 23 and 24. Yeah, 2 years. Boom. Absolutely. So the rents are going to go up. It's going to be 2 years. And then at some point, the interest rates will adjust a little. We'll find our norm again and things will kick on and kick off. Okay? Absolutely exactly what's going to happen. So hopefully that made sense. Wealth Coffee Chat done and dusted. I'm a bit late for my next meeting, actually. They're chasing me now, so I'll call it done. Hang on, 1 min. I'll call it done, folks. Join me tomorrow for another Wealth Coffee Chat. You guys be good, be awesome.